The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We have the Dow Industrials up 86, Nasdaq up 66, S&P's up 17.5, gold contract down $5, trading at $1,224 an ounce. Silver flat at $15.07 an ounce. Platinum down $7 at $9.45 an ounce. Copper $2.14 a pound. Light sweet crude up $1.74 at $37.63. Light sweet crude went topside 10:30 when the supply numbers come out. Takes the market with it. That was the first leg up. Second leg up. Fed, you talk about doves, they're doves beyond belief. They're worrying about the world now, folks. Bottom line is we're not going to see interest rates go up for a while. That put more juice underneath it. Bottom line, you have the S&P, the cash S&P that wants to run to that 2087. Right now, the cash S&P, we're at 2057. You get 20 more points to finish out that ABC structure on the way up, and guess what? It wants to do it. Clawing its way up. Notes. 10-year note down 5 ticks, 130.21. 30-year bond off 1 full point, 165.10. And King Dollar, dead in the water. Down 212, 94.42. King Dollar wants to run down to this 92.50 to 92.30 mark. Euro is up 25 ticks at 114, and the yen is trading at 109.64. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? The world of the S&Ps, let's take a look at them. What do you have? Okay, so check it out, folks. We go over to the SPY. What you're going to see in the SPY is this. The SPY right now is at $206.06. 211 is the number this thing wants to hit. What we had out here yesterday, which is pretty cool, which is giving an indication that this market's going to fall apart, is that we came down on volume yesterday, not only on the ETF structures, but on the indices. That was the first time that we came down on volume from the lows that were established out here on February 11th. I still expect that this baby's going to finish this ABC structure on the way up, and more than likely, we could very well spike those highs. That being said and done, guess what? The flip is going to be around the other side, meaning getting shot this market. Now, that being said, listen to this statistic. This is an amazing statistic. Right now, it's the largest short position and has been for basically about the last 3 weeks coming off this bottom. 4% of all the stocks in the stock market are short right now. This is the largest short position that has been put on by funds since 2009. And at 2009, of course, that was the beginning of the expansion going topside. So what you have out here is that they're going to have to end up covering those positions, and that's where that spike high is going to come in, I expect. Let's go over to the bond market. We take a look at bonds. What we have with bonds is this. Bonds right now, the 10-year note, down 6 ticks. Now, what had happened yesterday, folks, is this. The 10-year note had got over the 130.27 mark. It did it with 900,000 contracts versus 1.5 million. So it didn't have the juice, but guess what? It stayed over it. We backed down off that today. It has light volume backing down off it. So now you have a failure now. The real question is going to be as follow-through, meaning tomorrow, do you have a follow-through with volume expanding? Today, we do not have volume expanding inside that bond market. We go over and we take a look at the good old King Dollar gold. Now let's go to gold first. We go to gold first. What you have with gold is this. Gold out here today, you had a price spread from 12.17 to 12.33. You've backed down, dramatically lighter volume. We've done 125,000 contracts versus 157 from yesterday. This baby's building some cars. And after reading the Fed minutes, folks, fundamentally I can see why it's building cars. Because the bottom line is that inside the Fed minutes, this is where the Fed is, folks. So picture and I think most of us know this, okay? The Fed used to just worry about the United States. But bottom line is that this is a one-world economy right now. Well, they're worrying specifically inside about the world economy and the finances in the world. When you look at that, guess what? These rates aren't going up for a while, because if they're worrying about the world, folks, okay, guess what? There's lots of trouble across the world. There's no two ways about that. King Dollar. What do we have with King Dollar? Bottom line with King Dollar is that you're breaking down once again, and this is subtle, but it's so cool, man. You get volume coming out of the King Dollar once again. When you check this out, folks, it's pretty amazing. You know, King Dollar is on an ABC structure on the way down, meaning it's broke its B point, broke it with volume, all of the above. Guess what? Last couple days, it tried to get to a higher high. It tried to do it with 11,000 contracts, with 28,000 contracts, with 21,000. Guess what? It's breaking down into lows today with 31. Bottom line, it wants to do another ABC down. It's pretty amazing. Now, all these ABC structures on the way down are lining up into that 92.50 to 92.30 area. That's a big move down, folks. It is a monster move down. Our phone number is 877-927-6648. Let's take a look at some of the higher volume stocks out here and see what we have. And it's a low volume market, by the way. You have Pfizer up $1.48. Freeport McMoran's up 12 cents. You have Allergen up $7. That got killed yesterday. That was down $50 or $60 yesterday. Marbell is down 60 cents. You have Alcoa up 7 cents. Taking a look some of the Dow stocks, this is what we have. We have Boeing up 77 cents. ExxonMobil is up $1. Let's go over to the XLE, because what we did do, and that's what started the market higher, is that you had the oil numbers come in. Bottom line, oil caught a bid inside the XLE. That's catching a bid right now. It's up $1. We're at $61.29. If you look at ExxonMobil, what you have at ExxonMobil, that is up $1 at $83.21. Chevron, which is trying to get into that November 3rd high, that's up $1.86 at $94.53. That's going to make the run. I suspect what you're going to see is that Chevron's going to be the first one to get into the highs of the November 3rd level. The November 3rd level, remember this in the oil, gas, equities, many of them, that's a high volume spike high. Chevron was the first one up to get up to the low of that high. The way it's trading right now, it looks to me like it's going to go at least test that high. Dow Industrials right now up 83. You get the Nasdaq up 64. S&Ps are up 16. You look at percentage-wise, you have the Dow up 0.4%. S&Ps are up 0.7. Nasdaq Composite is up 1.3%. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials up 86, Nasdaq is up 66, S&Ps are up 17.5. Volume-wise, this is where you stand right now in the NYSE. Let's see. On the NYSE, you're at 574 million, so that means that'll come in at about 850, which is light volume. On the Nasdaq Composite, we're going to come in at about, the Nasdaq Composite could do it. The Composite could get about 1.8, 1.9 billion. So we'll see how that Composite does shake out coming into this close. If we look at the NDX 100, the Qs right now also have it. So it's going to get interesting. So the Qs got 18 million. No, they're not going to do that. The Qs are light too, because there's no way you're going to do 8 million coming into the close. So the Qs just overtook the highs that were generated out here the last week. The Qs are at 110.53. Now, this is what's pretty cool. So we've been talking about this ABC structure for a long time. You know, bottom line is that it's done 2 separate ABCs coming off these lows of February 11th. And now the Qs are going to be the first one finishing this baby off. 111.84 is where that gap is. And right now, you are into the gap. We're into this gap right now. So it's going to be pretty cool. It got into the gap today. That's going to suck it right back up into that level, I expect. If we go over to the S&P, we take a look at the S&P. The SPY right now is at 206. Now, to get into the gap, well, it's actually, the SPY's into the gap, too. It hasn't closed the gap, though. Oh, yeah, sure it has. Okay, so the SPY's already done it. The SPY's already closed that gap. Yeah, that's right. The NDX 100 was weaker than that. The SPY's already closed the gap. The SPY has 5 more points, you know, to get up to that 211 mark. So it's going to be wild watching this whole thing shake out. And as I said in the first segment, what I expect, more than likely what we're going to see is this, folks, is that you're going to see this thing spike the highs. And the reason I'm saying that is that your ABC structure is pretty close to the highs, right? What tends to happen when you get 2 downdrafts like we did, meaning the downdraft in August and the downdraft in January, in order for folks to get bullish again, because the market is so deviant, it's just unbelievable. I mean, if you give it's just perfect. I mean, the deviance inside the marketplace, you couldn't write a thesis on it. Couldn't write a book on it. It's so crazy. Okay, but what is the market's job? It's the job to take away the most amount of money away from the most amount of people in the least amount of time, and it is absolutely the most efficient mechanism I've seen that can do that. And not just do that in the context of how we've been alive. If you go back in history, this is over and over and over again. That's just how it goes. It's just amazing. Well, okay, that being said, in order to get everyone bullish, what you needed is a market that actually came up like this, meaning came up, sold off, came up, sold off, came up, sold off, came up, sold off. Now what I expect you need is this, particularly after reading the short position that's in the market right now, because the short position is in the market. It's the highest short position since 2009. And 2009, of course, was the wrong time to be short. 2007 or 2009 was a field day. 2009, forget it. That, the bread was out of it. So what that means is that most of the time, if they took this heat coming all the way up here, they're going to take the heat to the highs, and they're going to hope that it double tops or triple tops. And I suspect what you're going to see there is that it's going to have to be a spike high. And what a spike high specifically is you get up over the top intraday, and you'll get over that top by like 20 S&P points, something that's outrageous. So we'll see how it shakes out. And it's something like actually that happened yesterday at the close. If you remember at the close yesterday, there was two different things that happened yesterday it happened, the first thing that happened was at the close of the oil market. At the close of the oil market yesterday, meaning the pit close, at 2:30, you had the oil contract run up $1.20. It basically just ran within 5 minutes, okay? So that was saying to me that, okay, someone knows that the oil numbers are going to be decent, or at least they took a flyer that the oil numbers were going to be decent. And then the second part of that was what? Was how the E-minis closed. Because when they smashed that down at the close yesterday, that little baby, to me, was someone's buy. They pushed it down as fast as they could, huge amount of contracts, 126,000 contracts at 10 minutes of 4, and the thing snapped back way too fast, okay? So those two correlations, okay, was that bottom line, they're going to run this baby higher, and in fact, my take on that would be they already really understand what the numbers were going to be in the oil market, and it's the operational setup. That's what it comes down to. So now as we come up to these higher levels, what are you going to look at? Well, what you want to put together, first off, you're going to put together all the ABC structures, then you're going to put together the trend, then you're going to put together the tick, and we're going to see, and we're going to get harmony inside all of those, and then you basically make your calculated trade as to, okay, where this market's going. Our phone number is 877-927-6648. We go over to the XAU, the HUI. We take a look at the XAU. This is building costs, a higher price. XAU right now is at $69.27. It's a high volume consolidation. This next leg, this baby will not pull back. And I suspect, we've been here now since March 4th. We're we're April 6th, I think, right? Is it April 6th? Yeah, it's April 6th. That's a nice high-end consolidation. We look at the Gold Bugs Index, same setup in the Gold Bugs Index. That also is a high-end consolidation. That's trading at 179.43. And, we'll see how it attacks these highs. The highs out here that we're talking about inside the Gold Bugs Index are 182. And I suspect the metals market and the commodities in general, that's going to be all about this good old U.S. dollar. The dollar wants lower price. It's an ABC structure on the way down. Today inside the oil market, you got unleaded gas. That's up. My God, unleaded gas. You better go get your cars filled up, folks. Unleaded gas is up 5.5%. You get crude oil up 4.7. We had so crude oil, bottom line with crude, this baby's going to make it back up to those that $42 area. What crude had done, oh yeah, look at the volume on this today, big volume, man. This is what you have: 685,000 contracts today in crude. This baby, this has a high volume swing high from March 18th. at $42. Now, what? This is going to be really wild if this is an ABC up, because this can be an ABC up. If it is, $30, $30.67 is your A. 42 should be, so you get $12. Your C would be 35, 45, 40. If it's an ABC up, it's $47.27. That would be the A to B equals C to D. And guess what? $44 is ICE. You can run to 47 pretty easy. That'd be insane, but guess what? We'll see how it hits the B point, but right now, there's enough volume in that move higher today that it wants to run to higher price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is up 85. NASDAQ is up 65. S&Ps are up 17. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, you get the Dow Industrials up 85, NASDAQ up 66, S&Ps up 17.5. And as we do each and every Wednesday at 20 past the first hour, we have our man, Mr. Darryl Martin. And don't forget, folks, Darryl, my son Tommy, myself, we do an outstanding show every Monday, Friday, 10 to 11 Eastern Standard Time. We're trading a Nadex product. In fact, we're trading it every day. Bottom line, we do the whole hour on Monday and Friday, going over how these Nadex products and the exchange works. You can check that out on the front page of our website at TFNN. Go to TFNN, hit the Nadex banner. You can bring the exchange up, they'll put $25,000 of paper money into your account, and you can follow along with us and see how these trade each and every trading day. Daryl Martin, what's going on?
How you doing, man?
I'm doing great. Well, first we're going to talk about I see your beautiful daughter out here.
Yeah.
And I see we're going to save our historical stockyards, right?
Yeah, the Fort Worth Stockyards is actually one of the first exchanges in the U.S., one of the biggest hubs for meat packing plants and everything. Went through 2 world wars, and now it's Cowtown. They drive cows literally down the road twice a day, and it's very authentic. Real cowboys.
And
real
this is in
cowgirls.
Fort Worth, Texas, folks, right?
So it's where she rode her first horse.
I love it, man.
That's what made her fall in love with horses and wanted to be a cowgirl.
Okay.
And some developers came in, and they wanted to basically build a Starbucks and hotel and all this stuff over like this historical stockyards. And so she went in last night and spoke to City Hall.
Okay.
And I mean, the mayor of Fort Worth, Betsy Price, like she was right in front of all of them.
That's awesome, man.
And they actually responded to her and changed a couple things. Here's some pictures of this little girl here.
Yeah.
And that's one of the ladies that she knows. And that's her talking.
Look at you,
There
got
she
it all
is.
dressed up. I love it, man.
Yeah, so she walks in there, and that's the mayor right here on the left side.
Yeah.
And the whole city council, and she literally tells them about, I want other kids to have the same opportunity I had, and I want them to fall in love with being a cowboy or cowgirl and have the chance to ride their horse down the street, and
Yes.
do the rodeo, and because she competes down there and everything as well. And
that's so important in Texas too, man. Right?
it's what Fort Worth is.
Yeah,
if you don't
right,
have Billy
right.
Bob's and Cowtown,
Sure,
Fort Worth
right.
is just another basic plain city.
Right. No,
It's
no,
what made-
yeah.
we can ride a horse anywhere in the city.
Right.
You can ride a horse up to Sonic.
That'd be,
if
you know what's so weird about that? That'd be like getting rid of the fishing boats in Boston. I mean, we still got all those
Yeah.
fishing boats that still come up to the fish pier, even though the development took place, but the fish pier didn't. I mean, it's still the fish pier, man.
At the drive-in, they literally you can ride your horse up there. They have hitching posts and water troughs, and then they got seats where you can go sit down. I mean, we ride horses like crazy in Fort Worth, and just it's fun because it's just something you can do.
Sure.
And so she goes there, tells them all this experience. She gets this massive ovation. The mayor addresses her directly, and some of the council members, director, one of the Hickman family, the guy that owns basically 80% of the stockyards, addresses her.
Yeah.
And they did vote to actually preserve the main part of it and put a form code in place, and they changed how they did the parking because she talked about the safety of the parking not being adequate, what they were planning to do
Okay.
for the horses. And they also are going to put in she talked about them not taking away the outdoor arena, but they're going to put in another 2 actually outdoor arenas
That's
now.
awesome, man.
So she had a bit of an impact. Didn't get everything that she wanted, but
That's
quite
listen,
a bit. Yeah.
The bottom line is that's democracy. It's a beautiful thing, man.
Yeah, so she went in there and she got to speak, and they actually did change a couple things because of her speech. So it was really cool.
That's
And,
well, congratulations. Tell her that we love her, and that's so.
And as a trader, it's cool to go down there because you can actually see where they have. I mean, because it was an exchange.
No, I've
it was a
seen
cattle
when
exchange, yeah.
I know right what you mean. I haven't been there on the ground, but when you fly in, folks, you can see it. When you look, if you're
Yeah.
familiar with it, you can fly in, you can see it. It's really cool. I mean, you still see some of the what they put the cows in. You can still those the
the stockyards.
Exactly, stockyards, exactly, right.
Yeah, and but there's actually it used to be the exchange for a lot of the meat and everything, and so it's and it was the biggest one for a long time. But so it's cool. I mean, it's survived a lot, and now there's actually going to be stuff in place to protect it, and make sure it survives. It's been there for over 100 years.
That's a beautiful thing,
So
man.
it's the
I like
longest
it.
running rodeo in the nation. So I was proud of her. She got
Yeah,
out there. And
big
I mean,
time.
I wouldn't have done that at 9 years old. I would have been scared to death.
Huge.
So
Well, we'll be watching her. She'll be running for mayor. Let's see. It probably got to be 18 to 21. That'd be good.
yeah, she needs 9 to 12 years. So that's people told their mate would actually vote for her if she ran. So.
Oh, she'll be there.
She got a kick out of that.
She'll be running. So,
But
congratulations.
Yeah.
Market-wise here, what a market, right?
Oh my gosh, we had like a 300 pip move on pound yen yesterday.
Yeah.
3 deviation move on that. I mean, we've had some fantastic moves.
It's been, folks, if you haven't test drove this data exchange, just go over and do it. The volatility's been out there. The spreads are dynamite. And it doesn't matter whether you're trading oil, whether you're trading gold, whether you're trading currencies, whether you're trading indices, it's all out there. And you talk about defined risk, it's pretty amazing. You know what's so wild, Daryl, is that I just wouldn't. I was saying to Tommy yesterday, I wouldn't trade gold or oil in the futures market anymore. Because for the amount of premium you're paying, folks, it doesn't make any sense. Well, now that's because I day trade too, by the way. Okay, so what ends up happening is that, to me, if I'm paying 20 cents premium on the cost of oil, and oil is $1,000 a point, folks, and I have a defined risk, that's a huge deal. If I'm paying $2 to $2.50 for gold, and gold can go up and down $50, I'll pay for it. You know what I mean? It's just. Because
but it's too scary. I mean, you can't have a wide enough stop half the time.
Exactly. And you can't. And your defined risk is whatever you want it to be, not, which is dramatically different, folks. Okay.
Well, if you do have really wide, which, I mean, the old rule before we had stuff like this was, well, you just had to trade lower size with wider stops.
Yes.
And now you can still trade that same size, but you don't have to even worry about those stops, or you can more define it. There's a lot of ways to do it.
And when we say you don't have to worry about it, what happens is this, folks, is that it's defined stop, so it can go by your stop, and guess what? You don't get stopped out. Your stop out is the time of the contract. That's what the stop out is,
And what I'll even do, I'll use like the daily contracts on the spreads.
Yes.
To trade directionally because they have a lot of room to go,
Oh, that's what I love yesterday, the oil one, it was blowing my mind, man.
Yeah.
It would be the perfect situation. The oil contract, folks, they ran it into the close, and it was like insane. And it was beautiful. I mean, it was like sick, so. And
then what I'll do is, if I'm watching it, stuff like that, and I want to be able to protect it more, I'll go and I'll grab like a little 2-hour one just to protect it.
That's right.
So I'll give it a small, it's like buying a call or a put to protect the stock.
I got to get my head around that. I haven't done that yet. You were telling us that before. That's a cool thing to do.
It's the way to do it.
You know what I've been doing? What I've actually been doing, and that's a better way. What I'll do is I'll take normally half the contracts off. But I like the idea of what you're doing better, actually. I got to figure
because you basically can give up a little bit of that profit,
right?
And you can leave everything on and protect your profits. And then now they have the opportunity to run even further.
Right, and that's the key, folks. Because what happens is that even if you're at the top of the spread, the exchange is not going to be at the top of the spread because that doesn't make any sense. You know what I'm saying? So what ends up happening is that if, let's say, like right now, I have the 45.20s and the NQs, okay? And, the bottom line is that you're still at 45.18 even though the market's at 45.29. I'm just going to...
Exactly.
I took half of them off at 17. I'm going to leave the rest of them to the close because it's like I got to come down 8 points and I got down 10 points just to break, where it's staying right now.
Yeah, you got to start playing with them.
Well, it's a beautiful... I'm going to, man. Well, listen, man, congratulations. That's awesome. Look forward to doing the show with you Friday morning, man.
All right, I'll see you then.
Cooking. Have a great one, man. Have a safe one. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over these Fed minutes a bit. Okay, so Federal Reserve policymakers last month debated an April interest rate hike, with several officials leaning against such a move because it would send the wrong signal, and others saying it may not be warranted. Now, this is a quote. Several expressed the view that a cautious approach to raising rates would be prudent, and noted their concern that raising the target range as soon as April would signal a sense of urgency that they did not think appropriate. That sense of urgency, folks, would be that, okay, the economy is getting too hot, and they suspected, of course, that the market would sell off ASAP. That would be that sense of urgency. The debate is by flagging a potential April rate increase that nevertheless unlikely may have the result of adding more focus to the June session. Now, the April meeting, folks, okay, has no press conference, okay? So Bullard comes out today and says, no, it's a live meeting. Well, guess what? If it is a live meeting, what a live meeting specifically means is that they would basically do something. They'll have to turn around and say, and have a press conference. They don't have a press conference. This thing, you know, April to me is not a live meeting. They claim it's live, but guess what? I doubt it is. Some participants indicated that an increase in the federal funds rate target range at the April 26th to 27th meeting might well be warranted if the economic data came in as expected, the minute said. The March meeting marked an evolution in the Fed's policy approach as U.S. central bankers gave more weight to the impact, and this is the most important part I saw out of the whole minutes, of slowing growth abroad on their outlook. Many participants expressed a view that the global economic and financial situation still posed appreciable downside risk to the domestic economy outlook, the minute said. Data revealed to the Fed's thinking include not only domestic economic releases, but also information about developments abroad and changes in those financial conditions. That number there, folks, is the big deal. And why I would say it's the big deal, because, and they're right, I'd say right in the context, okay, bottom line, it's a one world market right now. They're worrying about overseas, and watch this. If we go overseas, if you think the Fed's going to raise rates when overseas, the United Kingdom right now, I'm going to bring you through a 10-year rate. The United Kingdom right now is 1.3%. France is 0.4%. Germany is 1/10. If they had economies that were moving, those rates would go up. Our 10-year, folks, is still 1.75. That's the 10-year. Now watch this. Let's go and take a look at the 5-year. This is where this gets really demented. Our 5-year rate is 1.2%. So when we talk about a 5-year and all of these rates I'm going to talk about right now, this is talking about lending the government money, okay? So if we lent the United States government money, they give you 1.2% for 5 years. If you're in the United Kingdom and you lend for 5 years, they will give you 0.7%. Now watch this. This is where it gets sick. If you're in France and you lend the government money for 5 years, you have to pay them 0.2% in order to lend them money. If you're in Germany, you're going to pay them 0.3%. So instead of them paying you, you pay them for the right to give them money. If you're in Sweden, you're paying 0.1%. If you're in the Netherlands, you're paying 0.3. You're going to love this one. In Switzerland, folks, okay, you have to pay them 0.8% per year to lend the government money. You can see how whopped that is. Now, let's go to the 30-year. 30-year, right now, we get 2.5%. You lend the government, buy a bond, you get 2.5%. In the United Kingdom, it's 2.2. Watch this, though. France is 1.3. 1.3% to lend you money for 30 years. In Germany, it's 0.7%. You can see what the writing is here. The writing is, which they have said inside those minutes, is that they're worrying about overseas. Once you put that together, you look at that context, bottom line, these rates aren't going up for a while. They're claiming, what's going to be intriguing here is this. They're claiming that now they're going to go up twice. First they were going to go up 4 times, now they're going to go up twice. It's going to be wild watching this thing shake out. And that's why I suspect the dollar's on an ABC structure on the way down. And what you have out here is that the commodity structure, bottom line, I suspect, is going to be on ABC up. And I'm talking about ABC ups, and they're just about everywhere. And now inside of that structure, when we're talking about commodities, if you come over to our website at TFNN, if you have cash that you don't need for 5 years and you're looking for a product that's FDIC insured, Everbank has one. And this is a pretty cool product what they have, folks. It's a 5-year market-safe commodity CD. It takes the minimum to open the account is $1,500. The cool thing about it is this. 100% of your principal is protected. So you're putting money away for 5 years. That's the first part that is important. So we're going to make sure you don't need the money for 5 years, just like if you put it in a CD. The principal is 100% protected. You can earn, okay, up to 70% upside payment per year, per commodity of the CD. It's IRA eligible, it's FDIC insured, and the way that it works, folks, is this. If you are a commodity bull, or you just decide that, okay, I will give up the right for whatever interest rate I could get off a CD for 5 years, and instead want to get a CD that if commodities go up, I may make a lot more money than that. This is something you want to look at. Inside the CD, this is what you have. You have crude oil, gold, silver, soybeans, corn, sugar, copper, and nickel. That's what's inside it. And what you're betting on is that you're betting on that those are going to go up. They average themselves out. Each year, on an April date, they average themselves out. They start all over again. So check it out. It's on the front page of TFNN. Everbank has some great products. I think this, to me, is one of the, I'm a commodity bull right now. I think the dollar's going down. So bottom line is that, dollar goes down, commodities go up. That correlation is there pretty well. If we take a look at how this market's running, they're going to run this market right into the close. They got it going pretty good right now. Dow Industrials, what you have is that the Dow right now is at 17,712, and the high in the Dow, by the way, is 17,977. The high. We're going to see the Dow spike its high first. That'll be the first one to spike its high. You're already you're almost at the downdraft that started on the 29th of December. If we go over to let's go take a look at let's see. We'll go into the small caps. We'll go into the Russell 2000, because I suspect what we're going to see here, this Russell 2000 is going to keep building some steam because inside the Russell 2000, what happens is that you have a lot of the small commodity stocks. This is Tom O'Brien. This is TFNN. Dow right now is up 104. Nasdaq's up 71. S&Ps are up 19. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We get the Dow up 114, Nasdaq up 74, S&Ps are up 20. If we take a look at inside the NDX, first off, inside the Dow Industrials, what is the strength versus the weakness? Strength out here today is Pfizer is up $1.58. Pfizer and Allergen, they called off the merger. Pfizer yesterday, let's see, Allergen got killed. Allergen was down $50. And Pfizer's gone up. Pfizer's gone from a price point of $29 to $32. Go back to, okay, so we go back inside the NDX, the Dow Industrials. Merck is number 2, that's up $1.38. Chevron is up $2.29. Now, Chevron, we were talking about Chevron a little bit earlier. Chevron, I suspect, is going to be the first one to get up into that November 3rd swing high. And that's going to be an important one to keep your eye on. The reason being is that if Chevron can take that out with volume, well, guess what? That market's going to go higher. Visa's up $1.24. Taken away from it on the way down, putting pressure into it, not that the Dow is down. Verizon is off 7 cents. You have American Express. Verizon's the only one that's in the negative. American Express is flat. GE is down 9 cents, and Goldman Sachs is off 34 cents. Inside the NDX 100, what do we have? NDX 100, the strength, INCY is up $8.38. Endo International is up 227. That's a dog. That's been going down for a couple years. Vertex Pharmaceutical is up 684, and BMRN is up 621. Taken away from it, on the way down, you have CSX down 21 cents. Fastenal is off 31 cents. Bed Bath & Beyond is down 19, and Net Appliance is down, is up. So out of the 100 stocks inside the NDX 100, this is what you have. There's only 3 that are negative right now. That's pretty intense. There's no two ways about that. Volume-wise, let's see what kind of juice we have coming into this close out here. Inside the NYSE, we are running at 672. Yeah, that's it. You're going to see, this is, oh man, you're going to love this market, folks. It's amazing. So check this out. Yesterday, the market showed its hands once again. There's a couple, the market's been showing its hands pretty cool. The IBB, that no doubt, up $15, 5.4 million shares. And if you see where this thing wants to go, it's going to be pretty cool watching this thing shake out. Because what you have is that the last time it was down on volume is right where it's at right now. It's 285.53, man. That's the number. And you're at 285.60 right now. The volume on a weekly was 33 million. Thus far, we're at 10.9 million. You gotta love it, So if we go over to the cash S&P, let's see, what day is today? Today's Wednesday, right? Man, this is gonna be sweet how this is lining up. This cash S&P right now, you're at the 2065 level. So this is what we're approaching. 2081 is your swing high from the 29th of December. Your next swing high is 2104. Your ABC structure is 2087. We're right next to it. And the high is 2116, So bottom line is that, number one, I suspect you're going to get there. Number two, the real question is going to be, do we have a spike high? Do they run this baby up over it? And the way this market's trading right now, that's what I'm expecting you're going to have. Because there'll be a huge amount of investors that will pile in, and I suspect that's where this extension is just going to get out of whack. And one of the cleanest ways that I've found that if that's what we're going to have is that you're going to have to watch the tick and the trend. The trend is going to be the first one. It's going to seem like the market can never stop going up. That's going to be the signal. And everywhere you go, hey, are you in the market? You in the market? Why aren't you in the market? That's going to be the number, top side. You stay right there, folks. We're coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bids. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man. And there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be faithful. Be faithful to that which exists nowhere but in yourself. Market-wise, let's take a look at it out here. We had the Dow Industrials up 112, NASDAQ up 76, S&P's up 20, gold contract down $4.50, traded at $1,225 an ounce. Silver down 5 cents at $15.06 an ounce. Platinum off $6 at $9.46 an ounce. Copper flat at $2.14 a pound. Light sweet crude up $1.90, $37.79. The light sweet crude, folks, 10:30 this morning, come out with the supply numbers. Market liked the supply numbers. Ran the oil contract. That was the first run inside the marketplace. Second run inside the marketplace out here today was the Federal Reserve. Minutes came out 2 o'clock. Bottom line, they're dovish in a huge way. They're worrying about the world economic situation. Bottom line is that we go back 3 months. They were looking at 4 rate hikes within the year. Last meeting, actually, they're still looking at 2. You start reading those minutes today, it looks to me that, guess what? They'll be lucky if they get 1 rate hike off by the end of the year. Bonds. What do you have at the bond market? 10-year note down 4 ticks, 130.22. 30-year bond off 26 ticks, 165.13. Now, both the 10 and the 30, folks, came back under the March 1st downdraft. March 1st downdraft in both the notes and the bonds. We came down with monster volume. The notes had 1.5 million contracts. We went back topside yesterday with 900,000. You came back off the other side. We'll see whether we get a follow through on the downward side tomorrow. Gold contract down $4.40 at $1,225 an ounce. Gold is building cause for higher price. Silver needs a bid. Silver down 5 cents, $15.06. Silver continues to have huge amount of selling each and every time it's up at that $16 area. King dollar is the number to watch, folks. King dollar down 147, $94.49. King dollar has a confirmed ABC structure on the way down. What that specifically means is that you took a B point out with volume. All this past week, it tried to get higher, had lighter volume, failed each and every day. Guess what it does today? Gets to a low volume expansion. King dollar's at 94.49, 92.50 to 92.30 is the number. And if we break that 92.30 on the way down, you're going to see King dollar at 88, which would send commodities to the moon, folks. A quick trip to the moon. That's what it comes down to. The euro up 14 ticks at 113, and the yen is trading at 109.76. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. If we go to the world of SPY, this is what you have. We're at $206.42. The ABC structure is 211. And I suspect, guess what? This market wants to get up into that level. Now, the ETF structure did all right with the volumes today. We did 87 million shares. You know, it's going into 114 million. That number is $207.14. I expect tomorrow it's going to go after that number, and we'll see what kind of volume comes in. It looks to me that 211 not only is game, more than likely what we'll end up doing is we'll spike the highs of the marketplace. We go to the NDX 100. What the 3 Qs did out here today is this. They did 24 million shares, which, by the way, it had that expansion of volume right into the close. At 3:15, we had 18 million. So we did 6 million shares in 45 minutes. Bottom line, that's a good start. We're at $210.67, $110.67, $111.84 closes the gap. But I would expect you're going to have here, the Q's also going to run up to somewhere that's 115 level. Big numbers. Gold contract, folks. What it did out here today, it showed its hand once again. And the hand that we're talking about here is that you went sideways to lower with dramatically lighter volume. Gold is building cause for higher price. We pushed higher yesterday with 157,000 contracts. You come down today with 128. We're trading at 1225. I expect you're going to make this run to the 1287.80 area, and we'll see if there's enough volume and, in fact, may have an additional ABC structure topside. Silver contract, silver needs a bid. Silver is the weak darling here in a huge way, not in a small way. I like what it did today. You know, bottom line, this also rejected lower price, had lighter volume. You know, we're going against 40,000 contracts. We're going against 71,000 contracts. We did 40,000. So in that basis, it's cool. Silver is at $15.07. In order to get to higher price, first off, it has to get inside $15.22. And where the big sellers are laying out, they're laying out at the $16 area. We go over to the bond market. We take a look at the notes first. What you're going to see with the notes is this. The notes backed off from their high. Bottom line, though, you get light volume when it's back off. So right now you did 910,000 contracts. You are under the swing point from the downdraft, which is 130.27. We're at 130.22. And good old King Dollar. So King Dollar is the number, folks. When you look at King Dollar, what you're going to see is this. We did 32,000 contracts today. We hit a low of $94.24. The last swing low out here was $94.29. We broke it. We broke it with volume. The dollar's already in an ABC confirmed on the way down. You had the expansion of volume. If we put this on a continuous contract, what you're going to see is that a continuous contract, we're at 94.49 right now. You bring this back, and you're going to see what's sticking out like a sore thumb and has been for quite a while. It's the $92.50 swing low. That's a high-volume swing low from August. That wants to get hit. We have an ABC structure on the way down that actually is $92.30, and that's $92.52. That's the first part. Now, if we break that, and we very well could break it pretty easy, you're going to see an 88 inside the King Dollar. 88 in the King Dollar will send commodities to the moon, probably send the market to the moon too, because the market likes how this dollar is getting weaker. So bottom line, the cash S&P is at 2066. The ABC structure of 2087 is still game. That's only 27 points away from where the A to B equals C to D. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. In the NYSE today, we did 869 million shares versus the 1 billion yesterday. Yesterday was the first time, folks, from the lows of February that we actually came down on volume. And that, to me, is the warning sign that, okay, guess what? Your ABC is finishing on the way up. Bottom line, I expect it, number one, to get finished, but more than likely, you're going to get a spike high also. If we take a look at some of the higher volume stocks in this market, this is what you have inside the S&P. Bank of America was up 8 cents. You had Pfizer up $1.57. Marbell was down 55 cents. We had Marathon Oil up 39 cents. We had Yahoo up 25. We had eBay up $1. Intel was up 18. Facebook was up 149. And right now, folks, we have our man, Mr. John Logan, up. And don't forget, folks, no matter where you are in this great country of ours right now, if you're listening on your car radio, remember that we stream 24 hours a day, every day. We stream live content Monday, Wednesday, Friday from 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. Now, all of that right on your cell phone, your browser. You go TFNN.com in your browser, hit Tiger TV, and you'll be amazed what the HD quality comes over the TV right on your cell phone. Our man, Mr. John Logan, has a great show every trading day, kicks us off 8 o'clock in the morning, goes over the markets, also has a great piece of software. It's the TAS Profile Scanner. Now, as you come over to our website at TFNN, you're going to see right on the carousel, the TAS Profile Scanner subscriber event is Wednesday, April 20th. We're going to be talking about this. We'll walk you through how this works. You can check it out right in the front page of TFNN. John Logan, what's going on?
God, man, it's good to be back with you.
It's a beautiful thing.
Good.
Hey, I'm with you every morning, man.
You know, I got to tell you something. Interesting you said that. I went on a walk today, and I'm like, man, I'm going to miss some of the information on TFNN. And I'm such a, maybe I just somehow overlooked this, but, you know, you just reminded people a while ago what I'm getting ready to tell them. You can get your mobile phone, plug this channel in, go to the reduced version that you got on the low bandwidth version that you got on the site.
Yes.
And just wherever you go, stay in touch with what's going on the TFNN network. And for some crazy reason, I don't know why, but I never really took advantage of that. I mean, I go around with my phone all the time, and I always try to get back to my desk to figure out what's going on. But the way you can get it on the mobile is just awesome.
Isn't it, man? And you know what's wild, folks? Just as John said, for some reason, it's really cool what's happening. You know, I always say that it's Hotel California, never get out. But I'm telling you, man, I'm hooked on my own network. And I am. Listen, man, I did the same thing. And it's really, folks, within like the last 3 or 4 months that no matter where I am, it doesn't matter whether I'm buying real estate, it's on. Do you know what I mean? It's great, man. And, you know, and I want to thank you and all the other hosts because that is what has, I think, made the huge difference. Do you know what I'm saying? It really has.
Well, it's a joy to be on your network. But I tell you what, having it next to you all day wherever you go, you know, man, it's wonderful. And for some reason I had overlooked that feature, and now I'm scrambling to get back to the. I mean, I'm knocking over chairs trying to get over here sometimes to listen to what's going on. And
yeah, too funny, man.
I feel like an idiot.
It's a beautiful thing. Well, hey, first off, you know, I want to go through the market, but let's go through the subscriber workshop you're going to do first, okay?
Okay.
So yeah. What we're going to do here, folks, is this. John, you know, number one, you can test drive this scanner, and the way it works is this, folks. You can the scanner is $147 a month. You can test drive it with a 30-day money-back guarantee. Okay, so you come over, you'll sign up for the scanner. If you like the scanner, great, you keep it at the end of the month. If you don't like it, guess what? You get your money back. That's the first part. The second part is that John's going to be doing a workshop on the 20th of April from 5:30 to 6:30. And inside of that workshop, tell us what you're going to be teaching, John.
Yeah, last time we claimed that we were going to do an hour, and we ended up doing, what, an hour and 45 minutes?
I know. We got to keep you to an hour, though, because people are busy.
Okay. All right. So, we talk about a lot of things on the morning show to try to prepare people of what's spinning around that might affect, basically, when it boils down to it, the U.S. stock market.
Yes.
And, I've been talking about the easier trade might be to kind of be long the notes lately. And the S&Ps, for instance, this morning were possibly a little heavy. The internals, the breadth was negative, and it actually amazed me that we climbed as high as we did. But talked about having a big wide profile in that index. But how do you, these are a couple of things that we talked about this morning. But
Sure.
how do you wrap a strategy around this kind of conglomeration of all these things going on? So what we want to do in the workshop is kind of, before we had done a webinar, you and I did one, then we did another one. It's kind of more of a, and I think those are recorded on your site somewhere.
Yes, they are.
But, kind of how to use the scanner, what are some of the benefits of it. Now we're going to talk about specific strategies to really ring the register.
Right.
And like this morning, we're preparing for some kind of move down in the S&Ps possibly. What's the strategy to use? Where are the pressure points to pick the battle? How do you stay in the trade possibly in longer term moves like this that you're expecting, maybe with some breadth crossovers that you're kind of impending right now? How do you take advantage of that, and how do you trade some of the underlying instruments with a strategy relative to all this on top of it? We're going to talk about some future strategies, some currency strategies, what's available in that particular instrument to try to mitigate risk when it comes to a hedge or, another market that's like a portfolio manager type outlook. We're going to try to cover a ton in an hour.
And folks, as you come over to our website at TFNN, you're going to see it right in the top of the carousel. As you hit it, you're going to see the 7 bullet points that John's going to go over. Check it out. It's an amazing piece of software. It's a 30-day money-back guarantee, so you have zero risk. And since we're in the marketplace, zero risk, folks, is a great place to be, man. It's just pretty incredible, actually. It is, right? Give me a break, man.
Free trade. Free trade.
There's no doubt, man.
And that brings up a point. We're going to talk about trying to, we don't use this term too often on the morning show, but sometimes, we do use the term free trade, and we'll talk about a strategy involving that too.
Oh, I love it. Every time I say free trade, I sell it, man. I'm only kidding. Listen, folks, I'm telling you, you got to listen to John's show in the morning, 8 o'clock. So this morning, right, you used it twice, right? And I swear to God, John, both times you used it, I says, I'm going to text him right now. I'm going to sell that thing right now. And I didn't, thank God, okay? I tell you, folks, it's an amazing show because what's so cool, folks, is that it's before the market opens, okay? So, you're looking at all the world markets, you're getting ready for the market to open, and, the mornings are always peaceful, too. That's what, I love the idea that I can stand up at my, kitchen counter, listen to you, drink some coffee, write the newsletter, and groove, man. Hey,
cool.
you wait right there, all right, man?
Okay.
We'll be right back. John and I are coming right back, folks. Our phone number is 877-927-6648. We had the Dow finish up 112. NASDAQ was up 76. S&Ps are up 21. We're going to be right back, folks. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're talking about our man, Mr. John Logan, who kicks us off every trading day, 8 o'clock in the morning, folks. Bed Bath & Beyond, they just come out with numbers. That had closed at $48. That is trading out at $50 right now. And this is the first time they've come in with some decent numbers in a long time. Bed Bath & Beyond has been on one big downdraft. Their net sales for the quarter was $3.4 billion. Their same sales stores are up 1.7%. And they're going to, bottom line, pay a dividend. So there's some action after the close in Bed Bath & Beyond. We're talking with our man, Mr. John Logan, and we're looking and talking about the scanner. So what are we going to look at here?
Tell you what, this little move in crude oil today, you were you were spot on that one 2 days ago.
That, you know what, man, the way that moved into the close yesterday, John, was a mind blower, man. You know?
Yeah, I was a little apprehensive about getting too heavy on that alongside today. I was kind of thinking maybe we should wait for a retracement or something back into that weekly unfair low. On the go, I've got the XLE up right now, but some things did line up for that to happen. You caught it earlier than everybody else, I guess, which is awesome. But getting above 36.58 on crude was, kind of getting back in the balanced area was important. We at the same time had this daily new profile attempt to appear. That means a whole new kind of support mechanism down there.
Yes.
And that jives with that weekly unfair low. But I was a little like, hey, let's maybe wait for those new inflection points.
Well, I was day trading it too. I mean, there's a big difference there. Do you know what I'm saying? Like all of these, what happens, folks, is that I jumped in there and I was in the today, but guess what? I went home. I didn't own anything. You know what I mean? And that is a different mentality. Do you know what I'm saying? It's like, I'm not going to lug it home with me. You know what I mean? And I bought it again this morning. You know what I mean? It's like, okay, so,
Good for you, man. Yeah, that's one of the things we have kind of a rhythm, I think, in the morning on the show. And
I think it's awesome, yeah.
And that rhythm, we try to clarify what's a trading opportunity, what's kind of a little bit more of a longer term opportunity.
I would say the scanner. The scanner. Okay, I don't want anyone day trading. That's the bottom line, folks. Okay, that's the reality. Do you know what I mean? It's when you're trading, when you're swing trading, it's a big difference. Swing trading, whether that's a week and a half or something, the scan is amazing. The scan is amazing for everything, but swing trading, you listen to us in the morning, great. That's a great deal. Most people have jobs, okay? You don't want to be day trading because guess what? You're not going to have any hair left. You get fired from your job. You're going to be looking at the market, all of the above.
That could happen, yes. Yeah. But, the scanner does have short-term trading opportunities in it. But we try to clarify, if we're like, okay, yeah, this is a trading opportunity, and this is kind of one where, I think I've probably even used the word back the truck up too, but we try to play defense first and figure out where's the risk, and then we just kind of take it from there. But the scanner really allows me to play defense. Just case in point today, I'll just admit it. Breath was heavy, barely closed positive on the internals, and I'm talking about our net profile breath. This is something in the scanner that you're not going to get anywhere else. It's an aggregate.
I love that, man. I know.
And you know what? Look, we got a little heavy on this. Things were kind of crossing over into negative territory. Oil kind of helped this matter, I believe, towards the end. And then, obviously, the market likes cheap rates, and everybody's – you talked about that before. But, the odds were, all things considered, looking at these inflection points that we were like, okay, 2046, 2047, 48, 49, that's a big area, and we play the odds. Let's try to sell some against it. Boom, got stopped out today. But again, this is a part of trading, and that was what we consider to be a really high probability opportunity, and we're right a lot. I'm not going to beat my chest, but today, again, the odds
was amazing, folks. This is where there's many things you can do with the scanner. What I love in particular, because I trade a lot of futures, I trade a lot of equities, but most of the time with the equities, what's happening, I like the sectors, right? And when I know a sector's going, listen, I don't know. I'm speculating a sector is going, okay? Is that then I like to go into the future part of that sector. And because, the scanner, there's no doubt, the scanner picked up the lows in oil, and it picked up these stocks in the XLE, folks. I'm talking about 6 weeks ago, okay? Yeah. And once it picked them up, it got me onto that, and then it got me onto the oil contract. That's why I went with oil too. And what happens, John, is that, and folks, is that I'm bearish on the dollar. I mean, the dollar's an ABC down to me. So when I put those three together, I said, man, I like that probability. Do you know what I'm saying? Because the dollar's an ABC down. The oil equities I own right now are moving up. It's like, okay, man, oil wants to go too. So
yeah. And what was weird today? We talked about Exxon as something that seemed like it kind of run its course up into that 84 area. I didn't see I'm looking at our kind of net breadth calculations on the XLE right now. I didn't see a lot of oil stocks really get going today.
This is what I know what you're saying, man. It was weird about Exxon and Chevron. They take turns running. That's what I've seen, and they're the two largest weighting structures, inside the XLE. Now Chevron moved today, man. Do you know what I mean? Chevron, it seems like the leader. But I know right what you're saying, man. It's like Exxon doesn't move until it does, folks, and then it moves. Yeah. It's kind of like the small caps, like the IWM. You ever notice that? The IWM can stay there, and then all of a sudden, when it moves, man, it just takes off.
I hear you. I apologize for that phone in there. A couple of stocks that we were looking at here, really high probability setups, didn't really move today, which was... That's
all right. They'll move.
I mean, the HPs of the world, a couple of others. Our little friend, Southwestern Energy Company, nice, safe little play. Actually moved down today. So, yeah, I mean, we talked a lot about oil kind of just hanging around down here below these, not really busting out, but kind of being range bound for a while. I'm still going to stick by that. I think a lot of these oil stocks are just there's going to be some great trading opportunities. You just got to let them come to you.
Yes.
When it comes to some of these inflection points. And the scanner, the good news is this identifies where that come to you part is.
Right.
And it's really cool. How about the XLU, man? Did you take a gander at that thing the past 2 days? We're talking about, I don't understand this one, but I tell you what.
You get me psyched now. Look at this.
Yeah. I mean, I don't understand this one because this is kind of
I like this.
This is kind of a rate play, and I'm showing our weekly. I'm showing
so you know what this? Oh, go ahead. I'm sorry.
No. I'm going to go into the ETF here and just pull up the XLU. This is another cool thing about the scanner that I love is I can get the things quickly.
Right.
It's just instantaneous almost because you're not calculating any of this locally on your machine. We're doing it all on the servers and we're just delivering it to you. So you could run this on a Google Chromebook or whatever.
Sure.
Probably.
How cool is that, right?
Or maybe not, but I don't think it has Windows on it. But anyway, so we're looking at the XLU, and you see that yellow right there on the weekly?
Yeah.
Okay, so this shows you the cell structure of the XLU, and I hope you have this version.
I do.
The cell,
I do.
The cell structure of the XLU.
Yeah.
And we're seeing that there's a new profile attempting to appear, and this has been happening since yesterday on our long-term weekly, first time in a long time. So, you know, our rate's going to go up. I hear the music. What do we need to do here?
Nothing. Go ahead.
I mean, we're going to break or?
We're going to break. We're going to come right back, though.
Okay.
But that, hey, man, I love what's happened there. Oh, baby.
Yep.
You know what I'm going to sell tomorrow, right? You stay right there, folks.
Okay.
John and I come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We got our man, Mr. John Logan, with us, who kicks us off every trading day, 8 o'clock in the morning. Now, as you come over to our website, folks, you're going to see right on the front page in the scanner, the Taz Profile Scanner Plus subscriber event. That's going to be Wednesday, April 20th. And what that event is going to be all about, folks, is that John's going to be discussing the current opportunities in the marketplace, the strategies that you can use inside the scanner in order to profit from that. So you come over to our website. You can have test drive this 30 days, 30-day money-back guarantee. You get the scanner for 30 days. You get in the workshop. Great piece of software. Right now, we're talking about the XLU. And you know what's so cool there, John? You know, it's pretty amazing. Now, so the XLU, folks, as that sold off yesterday, bonds were making a new high. I like that, man. You know?
Yeah, that was kind of a sea change event.
It's divergence. Yeah, monster divergence, folks. Okay, that's you know to me what happened there yesterday is that it was going into the downdraft from March 1st. Mm-hmm. And it had 500,000 less contracts. So we came down on the 10-year note with 1.5 million contracts. We got over that 130.27 with 950,000. But it held price, so it's like, okay, man, it can go higher holding price, but it gave it up today. So I'm going to, I've been keeping my eye on the XLU, but I didn't look at it yesterday. That's huge information, man, huge.
Yeah, so we started getting hints of this kind of possibility of a new balanced area, which are going to mean new inflection points, which are going to mean the market can come to us to these inflection points.
Yes.
All that falls in line. We got that hint started yesterday, and we're kind of staying in force here. So I'm going to pull up the chart. Actually, I can pull up the chart in the scanner here. This is really cool. You can get some snap charts.
And if you've been following this, folks, even when I'm interviewing John, and if you happen to be watching Tiger TV, whether it's on a computer or on your phone, what you're going to see here, which we haven't seen in a good month and a half, is that he has some red dogs that are inside this map. And it was just, remember, I mean, it was all green. Every one of them was so green, man. It was amazing, right?
Yeah, it's pretty incredible because a lot of these are possibly going to fold over. Friday's close is going to happen. Yeah. We're going to have a lot of these stocks are going to now be within a trading range.
Which is great because the range can be huge, right? Because it was a one-way trade.
I think it is going to be huge.
Yeah.
And as we go back to the XLU, you look at this, these are weekly profiles I'm showing right now in another charting package, which we're showing the exact same information in the scanner. I just want to show this on the e-signal here. We're going to have these new inflection points. And, because, we've been in this uptrend because of the rate environment, I'm more than likely going to be inclined to look at support on this to try to pick some battles.
Yeah.
On the long side.
I agree.
Because, because markets are, you guys been doing this for a while. They're not going to go in a straight line. They're going to be anomalies that happen every once in a while. And, I don't think there's a big sector rotation happening right now. I just think we're having some people take some profits in this particular sector. And if the rate environment is what it is and it's going to hang around, I mean, it's, the utilities haven't been a bad play.
You know what's crazy, man? And then, so watch this, folks, because this is crazy. So I've been looking for this S&P to finish an ABC up, right? And the way that's it been moving, it's like it's almost there. It's 20 points away right now.
Right.
But I really started thinking, I said, that's too easy. The market wants to spike a high. You know what I'm saying? Which, spike the highs, okay?
There is no free lunch.
Right. And so then this morning, Bloomberg came across the tape with, this is the highest short position there's been in the marketplace since 2009. 4%. Wow. 4%, John. Listen to this, folks. 4% of all stocks are short. That's insane, okay? And bottom line is that short position in 2009, they lost a fortune because it should have been shot in 2007 to 9, not 2009 to 10, okay? Market went up 16%. Okay, so when I saw that this morning, I said, oh, man, okay, so the market wants to spike the highs, right?
Right.
Now, you showing us what just happened with the XLU, that's more food for thought that we are going much higher because on a fundamental basis, where my head's going with this, is that if the market runs and they get everyone bullish again, which I suspect they're going to, right? The bottom line, it's not that bonds will go down, folks, but they won't go down because of fear. They'll go down. People say, oh no, the market's running, I got to get in the market. You know what I mean?
Yeah. So what's your if you don't mind me asking, what is your outlook on the bonds and notes moving forward? Like, is it kind of range up or is it range down?
I think they've topped. I think they've topped, yeah. But I think that now, which
you
is
may be right. I mean,
well, listen, man. But what I'm really psyched about right now is that I was always worried, okay, that my larger take, man, is that this is going to be a double, triple top. We're going to spike and we're going to get killed. This market wants to come down. So I know in that context that guess what, bonds are going to go higher, right? So I've been fighting in my mind, okay. So now.
As we go to sleep at night, this is what we think about.
Totally. There's no doubt, right?
Right.
So now, though, what I'm saying, I said, oh, I see this. And this is where it gets cool. Because you know what you just said? Markets don't go on a one-way deal.
Yeah.
What could happen here, folks, is that this will take years, okay? But we'll be in this huge range. And just little by little, that gets chipping away, and it'll be a very slow deal, John. Do you know what I mean? It's not going to be a catastrophe on the way down, but, bottom line is that 6-7 points in the bond market will be a lot. Then it goes back up 4 or 5 points, comes back down 6 or 7. You know what I'm saying? So,
yeah. Well, I mean, this morning.
It's a huge trading range. If you get a huge trading range, you're in heaven. That's what it really comes down to.
Well, you know what's wild is. Everything you just said, just from a fundamental, you're kind of wrapping your head around all these things going on. I mean, the scanner, we talked about it this morning. It was like, okay, we got an outside profile. Expect volatility.
Yeah.
So it's giving, it's kind of relaxing these inflection points and expanding them. This algorithm that we use to output this.
What does an outside profile mean?
Well, for starters, when we have. And I'm going to pull up the S&Ps again here in the scanner. You'll mouse over that. You'll see the current profile just by looking at the cell structure.
Yes.
Every time I use this, I love this thing more and more.
I know, man.
Love
it's
how
addicting.
It gives you
it really
everything
is.
so quickly. And as I look at the charts, I just want to show, because we've got a snapshot chart. We're showing a little. Again, you can. I show this information on Nissan a lot, but we've got an outside profile. What does that mean? That means that on our daily, which I love these daily inflection points, you'll see how powerful they are if you just look at the history of this thing. And,
yes.
So this is the S&P. So as we have an outside profile, I was like, wow, man, that usually means we're going to have a lot of volatility. So this range has expanded. And I was
I see. Okay.
Yeah. Yeah,
cool.
I mean, it's just basically saying, and certain things, and
it needs more room to breathe. I like it. Okay, yeah.
Yeah, and that means usually that you can sell those inflection points and buy them when it comes to hitting those envelopes. Like, it's kind of going to be, because when we have some automated algorithms based around this information, a lot of times when we have a wide profile that gets outputted like that, we'll eliminate buying the breakouts for a while.
Yeah.
And just trade the range. So
can you stay with me one more sector?
Yeah, man.
Awesome, man. You stay right there, folks. So John and I come right back. Dow Industrials, bottom line, they ran all those markets, folks. All the Fed threw out all the doves. Dow was up 0.6%. NASDAQ was up 1.5. S&Ps are up 1.1. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. And don't forget, folks, tomorrow morning right here at TFNN, we start programming at 7 o'clock in the morning. A great health show. We got Nico and Paige. Just go to tfnn.com, hit Tiger TV, and then, of course, I'm in, Mr. John Logan, 8 o'clock every trading day. And right now, we're looking at the XLU market breadth chart. Cooking, brother.
So, yeah, what we were talking about before is on the XLU, we talked about a lot of things after we kind of bantered back and forth. But, the XLE, we're basically just waiting for some new profiles to appear. And those new inflection points kind of let the market come to you type environment. That's going to, really be the way to play this. If we kind of moved into the S&Ps, talked about a bigger range here, this algorithm. A lot of times people are used to, if anybody goes and Google's market profile and kind of look up the genesis of the whole thing, it was a manual set type environment with a lot of subjectivity.
Right.
What this does and what the scanner really does for you is it automatically sets all this based on an algorithm that takes quite a few things into consideration and allows, and one of the features in there is a volatility component, which allows, when we're talking about regulating trades one way or the other, a lot of times, Tom, you watch the show in the morning, we'll talk about, okay, this is a longer term play. Let's move into the next time frame down to kind of orient the stops and regulate the trend. And those profiles will expand and contract just like it's very difficult to set a trailing stop on a stock, like let's just say IBM. Then IBM kind of gets volatile, but it's just a part of the trend right now. And your stop is based on a monetary situation, and you get hit. And a lot of times these machines will cause that to happen to shake people out. If this algorithm is going to find this impending new volatility for you, it's going to keep you in and adjust those stops, not based on price, but based on volatility.
I know, man. Now, I know.
It's sick how cool this is.
I mean, it is, man.
And I'm not saying it trying to be a salesperson right now. No. I mean, it is well thought out.
Well, one of the Tigers had asked a little bit earlier why I had put a stop on a certain oil stock that we own right now, right? Mm-hmm. So what I do, folks, is that I take the scanner, I take the volatility inside it, and then I take the volume, and that's when I throw it underneath that. That's what I do. Meaning when I say that, I take I'm looking for the volume, I'm looking for the volatility, and then I tuck it underneath both of those. Okay,
Right.
that's how, so it's always a little bit different. But of course, it's always going to be, I'm not risking more than $1 if I'm going to make 3. So you just, it's really cool, man. It's pretty sick, actually. Yeah.
Yeah, I mean, the first thing somebody told me a long time ago was, you want to try to make this as least exciting as you can, and that means, find out how to play the defense part first.
Right.
And I think, any good football team out there is like, hey, if you get the defense right, the rest of it will fall in place.
Well, you know what it is? It's like a football, you're always going to get touchdowns, but how many do you lose? And trading, in all investment, folks, you're always going to make money. Depends on how much you lose making it. That's the business you're in. And that's just not trading. That's every investment, right? I mean, that's,
And so many of the things that we talk about on this network, Tom, this, are based on, I think Larry just coined it perfectly. I mean, I guess this is a popular phrase, but, a smart man learns from his mistakes, a wise man learns from other people's mistakes, or something like that. I mean, we talk about things in a manner because we've been through these processes already.
Right.
And we hope people that listen to this network can benefit from that. And what this scanner does is a lot of the things that I've banked on in the past and currently are built into this, and it's a powerful piece of software.
Huge.
Yeah.
Okay, brother, look forward to the show tomorrow morning, 8 o'clock. Thanks, man.
Yeah, thanks, man. Okay.
Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right here tomorrow morning. Bam! Go get them, folks.